Hi, I'm Charles Mizrahi, editor of Hidden Values Alert. If asked to name the world's largest company by market capitalization, most people would answer oil giant ExxonMobil or perhaps retailer Walmart. But I'm sure German automaker Volkswagen wouldn't be the first company to come to mind. But for a short period of time, as strange as it sounds, Volkswagen was the world's largest company. And here's how that happened. For a brief time on October 28th, Volkswagen became the world's largest company with a market capitalization of $369 billion, hedging out ExxonMobil, which was only $343 billion. Volkswagen did nothing to achieve an increase in their market value. They didn't come out with a new car that flies or invent a way to use water for fuel. The reason for the surge in market value had nothing to do with the company, but everything to do with Mr. Market. You see, during the past several months, German automaker Porsche began building a stake in the company. Hedge funds using borrowed money took short positions, which was nothing more than a bet that Volkswagen's price would fall. At Friday's close, Volkswagen's market cap was $77 billion. On Sunday, Porsche disclosed that it held a much larger position in Volkswagen than anyone expected, and that caught traders by surprise. Because when trading opened on Monday morning, Volkswagen's stock price began to soar as those traders who borrowed and sold the stock short rushed to cover or buy back those shares. Over the next 2 days, the stock price of Volkswagen continued to surge ever higher, quadrupling in value as traders scrambled to buy back the stock. In addition to being the world's largest company by market cap in the world, Volkswagen's market cap was greater than the overall market cap of all other German companies combined. Now, did anyone really think that Volkswagen was worth more than ExxonMobil or the combined value of all other German companies? I highly doubt it. But at times, due to extraordinary events, Mr. Market does a pretty terrible job valuing companies. When most of the traders who were short finished covering their position, the stock naturally started to come back to earth. As most sane investors knew that Volkswagen's price was not properly valued on the upside, so too are stocks not properly valued on the downside when Mr. Market becomes depressed. Benjamin Graham, the father of security analysis and teacher to the world's greatest investor, Warren Buffett, said that Mr. Market, his metaphor for the stock market, is your partner. He said to view each day Mr. Market comes and offers to buy or sell your interest. On days when Mr. Market's depressed, he will offer you a very low price for your shares. But on days when he's euphoric, he will offer you a very high price. The great thing about this is that Mr. Market doesn't mind being ignored. You only agree to his offer when it is to your advantage, keeping in mind that he is there to serve you, not guide you. Because over the short term, Mr. Market does not do a very good job valuing companies, as we have just seen with Volkswagen's valuation. Mr. Market has been very depressed over the past month. The month of October was the worst month in the past 2 decades for the stock market. Out of 23 trading days, 16 of them were down days. And the Dow Jones Industrials had only 1 day all month of back-to-back gains. Investors were scared because of fears of depression, recession, the unfolding of the credit crisis, and the result was stock prices of great companies, which are financially sound and have enduring competitive advantages, sold off at the rest of the market. Mr. Market inefficiently priced many stocks on the downside, offering them at a fraction of their value. And here's one of the reasons why. During the month of October, many hedge funds were forced sellers. They needed to raise cash to pay out client redemptions and sold stocks regardless of the company's value. Because in times of panic like we're seeing now, investors sell what they can and not what they want. This is an opportunity for the value investor who is able to determine the worth of a business and buy the stock when it is trading way below that. Each month in Hidden Values Alert, I search for companies that Mr. Market is mispricing and tossing aside. If you let Mr. Market serve you and take advantage of his mispricing, you will see stock market down days as opportunities because it lets you add great companies to your portfolio at fire sale prices. This is Charles Mizrahi, editor of Hidden Values Alert.